This is the Asset Protection Show. Expert strategies by attorney John Skabelund.
Welcome to the Protect Your Wealth Show, a show dedicated to not only protecting your assets from lawsuits and creditors, but also protecting your legacy. After all, what we do isn't just for ourselves, but to create generational wealth. Now, insurance is critical and is frequently missing from asset protection plans. Today, discover why insurance is a necessary tool in asset protection, how insurance prices are spiking, and learn about the current developments in insurance. Today, my guest is Kurtis Shepherd. He's with Garry L. Johnson and Associates. He's a personal and commercial consultant and one of their producers. He's been doing this for 17 years. He's an independent broker, which you'll understand what that means during our conversation. And their agency is able to provide services in all 50 states. Kurtis, welcome to the show.
Thank you.
My listeners out there likely have insurance, but they probably don't understand insurance. So if you don't mind, we're going to start with just the basics. As you know, we work together quite often. You're my go-to for all liability insurance. So let me start with that question. What is liability insurance and why is it necessary?
Liability insurance is a type of coverage that protects you or your business financially if you're found to be responsible for injuring somebody or damaging their property. It's going to cover legal costs, so legal defense, settlements, and judgments. Liability insurance does not cover you for your losses. It covers the individual that is involved in that claim. So it never covers you or your own property. It's available in just about every aspect, from auto, home, business, just about anywhere you can insure, you're going to find liability insurance there. So basically, if somebody was to slip on a driveway that's icy and breaks their arm, your homeowner's insurance would cover those claims through liability coverage.
Okay, great. And from a legal aspect, everyone, insurer has two duties to their clients or customers. One is the duty to defend. So that's what you were referring to, Kurtis, by paying for legal representation, right?
Right.
And then the second is a duty to indemnify, which is typically when you injure another party to pay out a claim to cover the loss. Is that right, Kurtis?
That is correct.
Great. Who needs liability insurance? Who are your typical customers?
Every customer, whether they have a home, a car, a business, it doesn't matter. Even if you're renting a home, you still need liability coverage to cover yourself should something go awry while you're driving or in a home that you're renting or in your business. It's just anybody and everybody needs liability coverage.
Right. And so talk to me about, is there a difference in the types of liability insurance? You just threw out some instances, but we hear about auto, we hear about homeowners, we hear about general liability on businesses. What are the most common types of policies that people need?
It depends on what their lifestyle is, their assets, their profession, and activities that they enjoy with their family, their friends. You have doctors, attorneys. They need professional liability, or E&O insurance, as some call it. But if they're negligent in their work or failure to perform their duties, that's where professional liability comes in. And then another form would be product liability. If you're out manufacturing a product and that product hurts somebody, you're going to need product liability for those claims.
No, that's great. So just to sum up what you said, if you're driving a car, you obviously need auto insurance. If you own a piece of property, you need some kind of liability insurance, such as homeowner's insurance. If you're a professional, you have malpractice insurance. If you own a business, what do you exactly call that general liability policy? Is that the name, or what does a business like carry for like $1 million or something like that?
So a business, depending on how large or small your business is, you get a business owner's policy. That's going to cover your general liability and any property that you may own. And we're not talking about the building or the dwelling. We're talking about the actual contents inside of it. If you're a larger company, you're going to have a what they call a commercial package, which is going to include your general liability. It could include the professional or any other coverages that you need, but it's more of an a la carte basis when it comes to commercial packages.
And while we're talking on that subject, I often recommend to clients that they look at directors and officers coverage if they're involved in like a nonprofit or a charity or a foundation, as well as if you have partners and things like that. Who needs directors and officers and type of coverage? Who does that apply to?
So that's going to apply to the owners of the business. So you have a large law firm and owners are found negligent in how they're running the business, or there was something that happened at the business. That's going to protect the directors of the and the officers of the business and then into their family as well. So that's covering you for any claims that you may have from running the business.
Okay. And then how does someone know what they need? What is the proper process?
To sit down and visit with an insurance agent like myself and go through a comprehensive checklist and understand what is the proper way to cover you and your assets.
So give us some advice on that. How does someone know whether they're working with a competent professional like yourself? What sets good insurance brokers apart from not so good?
Well, first of all, it's going to be the service. Annual reviews, going through it, like I said, that complete checklist of in educating. Are they educating you on what risks you face as a business owner, your business, um, and how that translates in goes towards your obviously your family and your livelihood.
Any other key factors as they're interviewing someone to know whether this is the right professional for them?
I think it just comes right down to trust, relationship, understanding how the policies work, what the exclusions are, what their coverage limits are, and reviewing each of those exclusions, like I said, because some of those exclusions you may think they don't apply to you, but we'll just say like a subsidence. If you have a subsidence exclusion, you're going to have anything that's attached to the ground that you put in, and 10 years later there's a claim that can come back on you.
Okay, so let's talk about that real quick. You used a word I don't know if everyone is familiar with, and that is exclusion. So what are you referring to when you
So
say an exclusion?
that's going to be what the insurance company says. We're not going to cover certain claims that come about. When I mentioned subsidence, so we see that a lot with your like a fencing contractor that has put a fence in the ground and the claim has come about because of that. Or another fencing company puts in a wrought iron fence, like a view fence. They didn't actually put the wall up, they just put the fence up on there on the view wall, and something happens that the block layer did, it can still come back on the actual wrought iron contractor that put the fence in.
So let me just try to simplify that if you don't mind, Curtis.
Yeah,
Exclusions are in a policy where the insurance carrier is saying, we will cover you except for in these instances.
correct.
And it's what I call the devil's in the details. It's the fine print. And
Exactly.
unfortunately, it tends to be the source of filing the claim only to find out that the insurance company is not going to cover you because of these exclusions that others might call them loopholes for the insurance company, but basically this is their attempt to get out of their duty to cover the claim.
Correct. The other thing I wanted to mention, John, is that you need to find somebody that is specialized in your area
Mm.
of a business. So just going to the agent down the street that writes a bunch of the businesses, they may not understand what a law firm needs or what a doctor's office needs or what a construction company needs. Just know that when you're working with an agent, they should know your industry, the insides and outs.
That's well said. If I was asked by a client, how do I determine who's a good insurance agent versus someone else? Really, they need to understand your business, your assets, your risks, your lifestyle. And it really is not a quick conversation. They should be diving really deep and know your industry very well. To your
Right.
point, Curtis, the insurance a law firm or service-based business has is very different than a manufacturer of a product or, a construction crew, for
Right.
example. Each business has different risks, and when you have someone who specializes or knows that industry, they know where the pitfalls tend to be in that particular industry.
Yep.
The second thing I would share is I find that the great agents um, take the time to get to know where you're headed. Like you said, they want to make sure that your policies are always up to date and they will identify your blind spots. Meaning, have you thought about this particular issue? There is a special kind of insurance that covers that. Everything from cybersecurity to you name it. There's so many different types of policies out there and coverage that's offered that honestly, Curtis, I don't think most people are aware of. And so the expectation is someone like you will bring it to my attention that, hey, this is a potential issue. Have you thought about this? I recommend this type of coverage for you, as well as most clients don't know what amounts they need. I get asked all the time on the business setting what amount of coverage should the client get, and I always defer to the specialist, the insurance broker, because you should know. Each business is very different. Your
Correct.
thoughts on that?
Just knowing the business, the ins and outs, reviews, because you add things to your business as you grow, knowing what protections you're going to need for those new equipment or new office computer or desks. It really doesn't matter. An agent should review that.
I'm sure you've had claims that have been submitted and denied.
Yep.
Is how frequent does that occur? Do you any ballpark?
I would probably say about 1% of our business gets it. We're not
Okay.
covering that.
That is really low. That's you guys must be doing a great job of making sure that the exclusions and the coverage are buttoned up. So that's
Right.
fantastic. Great.
But in going to that claim, if I had access to a like their lease agreement that they have signed with the property manager, it could have helped in getting that claim paid for had I known what that agreement said when it came to hold harmless agreements. And as far as like water claims and things like that, you really need to look at the lease agreement when it comes to a business.
So let's talk about that. A lot of our listeners are going to be real estate investors. So let's talk about what type of insurance should a real estate investor who has a rental property, whether that's long term or short term, what should they be aware of as far as it pertains to their investment properties?
They should know what the local risk factors are going to be before they go out and buy a product. Um,
What do you mean by risk factors?
so let's just take California, for instance. We have those wildfires there. Our company is offering wildfire coverage in California. Or are they offering hurricane coverage in Florida? You should know what that looks like before you go buy a property there. You should know what the local state government is requiring as far as insurance on a property. And they should really invest in risk mitigation measures. If they were to buy a home or a building or a home in California, they want to make sure they're cleaning up around the properties and making sure that if a fire does come, what are the chances of it burning my building down or my home?
Talk to us about landlords policies versus renters policies. A lot of confusion tends to be around that subject. Can you help us distinguish between those types?
So we're talking about a renter's insurance is going to cover the renter. So you buy a policy that's going to cover your liability and it's going to cover any property that you have inside that home. As far as a landlord's policy, or what we call a dwelling fire policy, is going to cover the owner for liability. It's also going to cover the dwelling. So what is the cost to replace the home that the renter burnt down? um, those are the two differences. Is one is just for the renters and it does not cover the home or the dwelling itself. It's just going to cover your liability and your property. Dwelling is going to be just liability for the building owner or the homeowner, and then their liability. That word liability comes in because it's important.
So let's talk real quick about the concept of additional insured or cross indemnification. So sometimes I see that with the renter's policy needing to name the owner of the property as an additional insured, and concepts like that. Can you first explain what does it mean to add an additional insured to a policy, and when should that be used? Where do you frequently see that used?
The additional insured, if I'm a homeowner and I'm renting my home out, I want to have some coverages for myself. So I would require that renter to purchase a renter's policy and list me or my LLC as a additional insured, so that some of my liability then in a claim would be on their policy, then it hits mine.
So in other words, it kind of extends the coverage to whoever you add as the additional insured. Is that right?
Correct. And
Okay.
that additional insured could be a financial institution, a trust, if a home's put in a trust, if it's put in a LLC, or just me, my personal home.
Right. So that's important. Hopefully, our listeners caught that it's important if you are a landlord and you're renting out a property, if you have placed the property into an LLC, which I certainly recommend, that the LLC is the insured or at a minimum, the additional insured to make sure that we have coverage extending to the LLC. What could
Correct.
possibly go wrong, Curtis, if you own a property in your own name? So Kurtis Shepherd owns a rental property. You do the right thing, you put it into an LLC, but you forget to update the insurance on the property. What could go wrong?
The home is owned by the LLC that's in my name, and I've insured it in my name. Well, the liability goes to me, but the LLC is no longer has that protection. So the LLC could be sued by somebody that slips in the driveway and breaks their ankle.
Have you seen where coverage was denied or not extended because the deed is owned or titled into the LLC's name, and yet Kurtis Shepherd is the insured? Have you seen ever denial of coverage in this instance?
I personally haven't, because I'm going to go back to the checklist. So when we meet with somebody, we go through a complete checklist of coverages. And there's a section in there that asks, is it owned by an LLC? Is it in a trust? Who needs to be listed as an additional insured
Hmm.
on this policy? So I personally haven't, because I've always worried about a claim coming towards my E&O insurance. So I try to stay out in front of that before it even comes about.
That's great. When you say E&O, you're referring to your errors and omissions where it's your malpractice coverage if you made the mistake. So it's
Correct.
great to hear you are The cobbler has shoes over there. You're following your own advice. That's great.
Yeah.
So let's talk about short-term rentals for a moment. Those
Okay.
tend to be a different animal at times where I've had clients have difficulty obtaining liability insurance on a short-term rental. Can you explain why is that the case? Why do insurers care if it's a short-term rental versus mid-term, long-term, or something else? And what advice do you have to real estate investors who do have short-term rentals when it comes to insurance?
The biggest issue that you're seeing is because it's a constant turnaround of people coming in and out of that home. The renters partying or having a good time at your home and somebody's getting injured. The liability is really high when it comes to those short-term rentals because not everybody's going to treat the home like their own, and some of their guests don't always either. So the biggest issues that I'm seeing is guest injury claims, damage to their property, um, just vicarious situations, disturbances like illegal activities, shootings, things like that. Um, and then personal injury claims to non-guests. So should those people be at the home? No, but they were there and they were injured. So that's been the biggest thing is those guest claims.
So have you seen what I've and my clients have seen where it's just more difficult to obtain coverage on short-term rentals. Is that what you're seeing as well?
We are. So a lot of the time, so if they're using like a VRBO um, situation, they have a short-term rental program typically that you can buy into. But again, I would want to see what that policy is going to exclude.
Yeah, and I just want to make clear my understanding, and if you understand differently, Curtis, please let me know. But the carrier, the insurance company, if you have a short-term rental, you better disclose that it's a short-term rental because I've had clients have issues where that becomes discovered and they cancel coverage.
Yep.
So it is critical. It's a different animal. I hope everyone understands in the short-term rental industry, you are in the hospitality business. Your tax advisor can talk to you more about that, but that's how the IRS looks at your short-term rental. And I think that is permeating the insurance industry in that regard too.
Yeah, for sure.
So let's shift to auto insurance just for a moment. It's very common for my clients that may have adult children living at home, and the adult children regularly use a vehicle titled in my clients' names. And one of the pieces of advice I give them all the time, Curtis, is hey, you really need to retitle that vehicle in your adult child's name, get them off your policy. But what is your advice to that? How can clients protect themselves from their adult children's accidents should they be driving a vehicle that they own or is on their policy?
It's a situation where is that adult child still living at home with you? Because most auto insurance are going to want you to cover everybody that is driving age that is living inside the household. Now, if the kid is not living at home, they're off at college, then it's best to put that vehicle in that kid's name and let him purchase insurance on that car to alleviate the liability issues there that come of it, because it's more expensive to insure everybody in the home when they don't need to be insured on your policy. They can be on their own, because when they're insured on your policy, they're licensed to drive every vehicle that you own, whether they're allowed to or not.
So, what advice do you have? Is there no workaround solution if I have an adult child living at home? The vehicle is titled in their name. They have their own auto insurance policy on that vehicle. Do I still need to be covering them under my personal insurance policy?
You don't need to. If the car is theirs and they're the only ones that use it, they don't use your vehicles, then I really don't see any reason why they why you would want to, but most insurance companies are going to ask, or do you have anybody in the household driving age? And you want that because if a kid takes your car and wrecks it, then we've seen cases where there was no liability because that child was excluded from that policy. So there's no liability coverage. So if they injured somebody, it's going to come back on you personally.
If the child has their own auto insurance policy, would their auto insurance policy pick up coverage?
Yeah, so your policy would be the primary because it's following the vehicle, not the driver. If you burn out your limits, then it's going to go towards the child's insurance at that point.
Okay, so that's an important concept. I guess it's a general question out there is, so Kurtis, you loan me your vehicle, and for the weekend, I'm going to go take it up to the mountains to the cabin or something, and on the way, I get into a accident. So how does that insurance work? Does my personal auto insurance policy pick up first, or does yours, or what order does that look like to you?
Okay, so it's going to follow the driver or the vehicle. So you wrecked my truck. Um, my insurance company is going to pick up the first seat in that claim. Once my liability limits have been exhausted, they're going to go after your policy. So once your policy limits are exhausted and we've got a $2 million claim out there, they're going to come after both of us, the owner and the driver.
So, Curtis, shifting gears to umbrella policies, can you tell us what is different about an umbrella policy versus general liability insurance?
All right, so the umbrella insurance is a it can be on a personal level or on a commercial level, but it adds an extra layer of protection beyond the limits of your homeowners, your auto policy, or even your general liability on your business. It supplements what was not covered under the liability limits of your underlying policies. Um, it adds that extra layer of protection so that if you do run through your underlying limits, you're not out on your own on an island. You have the support of the carrier there at that point to come in and to help resolve any claims.
Okay, and let's use a hypothetical for our listeners. So, imagine you have $300,000 of auto insurance coverage. You have a $2 million umbrella policy that's a personal umbrella covering you. And there's a catastrophic accident that someone is suing you for wrongful death for $10 million.
Okay.
So I understand it where the auto insurance company can get out of the claim, their duty to indemnify and defend by fulfilling their indemnification, writing that check of $300,000 and wishing someone well. What you're
Yep.
saying is that the umbrella policy then picks up the next $2 million. Is that right?
That's correct.
Okay. Now, one of the reasons why I love umbrella policies is they have that duty to defend. They'll hire legal counsel for you. Now, my understanding, Kurtis, is that many policies, the coverage is depleting dollar for every attorney bill that they receive. So if there's $200,000 in attorney's fees in defending the auto driver, that $2 million umbrella is actually dropping to 1.8 million in that instance. Am I understanding that correct?
Yeah, that's correct. I mean, some policies are going to be depleting, and some are going to be have a duty to defend outside of the limits. So if you have a $2 million policy, you have the liability protection for any property or personal injuries claims there, but the insurance company is paying to defend you outside those limits. So if it's in your situation, a $10 million claim, They're going to give you $2 million of liability, but they're also going to defend you until the end, until that claim is closed and they're done with it.
Right. And to your point, there are other policies out there where you get still the full $2 million of coverage, plus they're picking up the attorney fee bill, correct?
Yep. So it's so what we call that is the duty to defend is on that is outside of limits. So the limits are the 2 million and whatever their legal fees are, that's not affected by your 2 million. It's
Right.
uh,
And to state the obvious, in my hypothetical, if the plaintiff is successful in obtaining their $10 million judgment, they win the full 10 million. Well, obviously the auto insurance is paid out 300,000. The umbrella's paid out 2 million in this instance. So 2.3 million of that $10 million is covered, and the driver is now exposed to the difference.
correct.
Well, that's why I love umbrella policies. I don't know how you feel, Curtis. Do you recommend them? I call it lawyer insurance because the legal fees get picked up.
I call it a cover your assets policy because and I do recommend it to everybody that I work with. I actually have a disclosure that they have to sign should they choose not to buy it. I have a written signature and a note from them saying they didn't want it and they chose not to buy it.
What surprises a lot of my clients is how affordable it tends to be. Now,
Yeah.
obviously, it's very dependent on your state and the assets that you own, but it is very surprising to many clients that a $1 million umbrella policy, personal umbrella policy we're talking about, is very affordable in most states. Often I'm seeing quotes of approximately $500 or less. Now, you Florida residents, that you're not going to find that there and
Um,
likely in California, but in many states, that's what I'm seeing. What has your experience been for a $1 million personal umbrella policy?
4 to 800. I mean, it's pretty cheap. Again, a home and an auto policy, you're probably looking at $400
Mhm.
to $500 for your umbrella. But you got a boat, a trailer, and a bunch of motorcycles. Well, your rate's going to be much higher.
Right. And I'll add, if you have any minor children driving, certainly
Yeah,
it's going to jack up your umbrella.
yeah.
Let's talk about self-depleting umbrella policies. Are you familiar with some umbrella policies diminishing the amount of coverage by deducting the amount of the legal fees from the policy coverage amount?
That's what I'm saying. So when the umbrella policies limits have been used, let's say by you, John, and you've got $200,000 worth of legal fees, and another $1 million of of liability towards the claimant. That $200,000 is not added to the 1 million. It's taking it away from, so depleting it.
Right. So
We
instead
don't.
of having $1 million of coverage, that $200,000 attorney bill is actually dropping that down to $800,000. Is that right?
Correct.
Right.
Yep.
Okay. I'm sorry I misunderstood you there, but my understanding is that in the cases that I see, we're trying to get the settlement reached, not even having the lawsuit. But if a lawsuit does commence, we're now draining the umbrella policy. In typically, my understanding, Curtis, is that there are umbrella policies that are not self-depleting, that they will continue to pay the attorney's fees without decreasing the amount of coverage. I assume you're
Okay.
familiar with those too.
Yep. But
And
majority, it's going to be depleting. It's not going to continue to cover legal fees.
right. But I want to go back to something that you said because it is contrary to my understanding. So I just want to clarify this. So
Yeah.
imagine we have an accident and there's a claim for $5 million. We have an auto insurance policy or homeowners insurance policy with $500,000 of coverage for the personal injury.
Yep.
We have a $2 million umbrella, so total coverage is 2.5 million. Obviously, that's only half the amount of the potential claim of 5 million. Now,
Right.
obviously, we're seeking to settle that to be within policy limits, is what it's called.
Yep.
But my understanding is that the umbrella policy is continuing to defend the client through that until settlement is reached or the court case has gone through its court system. Is that your understanding too? Because that's what I've been operating on.
In some instances, John, yeah, it really depends on the policy that you purchased. So what are the coverage limits? What does the policy language look like? Um, what does it say their duties are as an insurer to it should a claim come about? Are they gonna do the legal fees on a separate limit or a separate pool, or are they gonna put it in that pool money that they would go out to pay claims?
Just to be clear, you're referring back to the depleting aspect of the umbrella policy.
Correct.
But why I advocate umbrella policies is not only for the additional coverage it provides, but the assurance that insurance policy is paying the legal fees associated with the claim. And that peace of mind is invaluable from my perspective. But is- am I hearing you correct?
Yes. So, like as I mentioned before, it's got to be the what the policy is. So, is it depleting or non-depleting when it comes to legal fees?
So let's say it is depleting. So $2 million umbrella policy. Like you said, most policies are depleting. They file their lawsuit seeking $5 million in their claim. And during that time, the insurance company has retained legal counsel to defend them and has racked up a $200,000 legal bill.
Right.
So at the end of the day, the plaintiff is successful. They obtain their $5 million judgment. That's what we call it when someone wins their suit.
Mhm.
And then the umbrella policy is obviously on the hook to pay out their claim. But to your point earlier, we're taking that $2 million of coverage, we're deducting the $200,000 of the legal fees out of it. So we got $1.8 million in addition to the auto insurance that's going to pay towards the judgment. And as you said earlier, that's when the client is now exposed for the difference. Again,
Correct.
doing my math, the client would be exposed to 2.5 million plus the deduction of the attorney's fees. So we're at 2.7 million that the plaintiff can go chase against the defendant, the client. Correct? Okay. And that's my
Correct.
point is that's why I call it legal insurance is my understanding is primary insurance, whether it's homeowners or auto insurance, they can just write that check because what tends to happen, Curtis, is that it's a smaller amount of coverage and
Uh-huh.
they are more quick, it seems, to just write out the $300,000 check or something. Whereas my experience, the umbrella insurance companies are not as quick to write a multi-million dollar check out, and they're more
No.
willing to vigorously defend.
Correct.
Okay, great. So
So,
go
John,
ahead.
I was looking up while we were going through here is looking at one of my clients' policies that had just renewed um, today. So today's the renewal date, and defense costs are provided on an outside limit. So defense costs are not included in this particular policy. The $5 million would go to bodily injury, personal injury, or any property damage liability coverage goes to that 500 or $5 million, but defense is going to be outside. So
Hmm.
they're going to defend it they'll they're blue in the face.
Right.
Right?
Yeah, and my experience is it depends on the insurance carrier. Some
Yep.
are very commonly the way you just described, whereas others are frequently depleting.
Right.
Yeah, that's great. Let's shift gears, if you don't mind, back to our landlords for a moment. Let me ask you, as you have seen from my clients, that we typically have a real estate holding company LLC that owns individual LLCs owning each property. So let me give an example. So, Kurtis, let me get your opinion on what was proposed as a cost-saving measure by a client's insurance broker. The situation was the client had a real estate holding company, we'll call it the mothership, which owned individual LLCs below it, and each individual LLC owned a separate property. So for our example, let's say there's three properties owned by three separate LLCs, all owned by one real estate holding company, the mothership. Well, I advocate that each LLC that owns a property should have their own insurance policy. But this broker had proposed that we have the insurance policy at the real estate holding company mothership level, and that policy would insure the three underlying LLCs. Before I give my opinion or concern on that, what do you think about that strategy?
Well, my I'm having some concerns now for each of the other LLCs that are owned underneath the mothership. Having one policy owner, one claim could take down the entire ship. So the whole fleet of properties could be wrapped up into one claim and they lose everything. If
Right.
you insure them separately, each LLC is owned um, by the mothership, but insured on a separate policy. It keeps the liability at property number one if a claim comes in. Property number two has its own limits, and property number three would have its own limits. Um, but we would want to still list the other entity or the mothership as an additional named insured, just so there is some sort of level of protection there.
That's a great point. But no, that was my exact concern. One of the principles of asset protection is that we always want to bifurcate risk. The whole point of having three separate LLCs, each own an individual property, is to make sure that a claim against one is not cross-contaminating the other two properties. So it sounds like you agree that if we, although it may save the client money to have a policy at the mothership real estate company level, that it unnecessarily exposes all the properties underneath it to a claim.
Right.
I appreciate that.
The other situation there that the broker was might be looking at, John, is how do we manage these policies on these three, four homes that are renewing at certain different dates throughout the year? And what if you forget about one? Well, that policy's gone and now you don't have insurance. So if you had it at one carrier or one policy, it's one bill that you're paying every year. You don't have to worry about sending four different checks, whatever it is. And you know what your coverages are on each property because it's on one policy, but the liability is still going to be better served on its own separate policy, whether it's $3,000 more to insure all three or four on their separate policy. Um, but in the long run, should a claim come about, we don't want to lose everything. We're willing to lose one of the properties if it comes to that, but not all of them.
Yeah, exactly. No, thanks for confirming that. That was exactly my concern, is that we're starting to defeat the point of having separate LLCs. Let's shift gears here, if you don't mind. So talk to me about the current state of the insurance industry. As you know, California wildfires, you've already mentioned Florida and recent tornadoes. What is the current situation in the insurance industries, and especially how difficult it is to obtain coverage in certain states?
You know, the speaking of the claims in Florida, we've got was it North Carolina, South Carolina, Florida? They've all been hit by hurricanes or even fires as of late. Um, the, the regulators at the state level have really messed things up when it comes to homeowners insurance. They want homeowners insurance companies to lose money for 5 years before they allow them to come in and readjust rates at the state level. So the only way we're seeing them get around that is writing a new product. So putting out new products, we're seeing the premiums skyrocketing across everything from auto even to home, because those fires took out a lot of autos as well. Um, we're seeing the exclusions on wildfires. We're seeing them here in Arizona. It's hard to get insurance in Flagstaff or Pine Top, Sholo. Those areas have been just getting smaller and smaller when it comes to carrier options. So um, we're going to see, I'm anticipating we're going to see a lot more insurers jumping out of these high risk states.
So, what do you see as the future of this industry? Because it seems like more carriers are pulling out of markets. And with fewer carriers, rates inevitably go up. In fact, maybe you can confirm, but the state of California's FAIR plan, isn't the state worried about insolvency on that plan and having to raise funds across the board by surcharging California residents?
Yeah, I mean that's the only way they're going to be able to stick around is bring in new premium dollars, be able to adjust rates off of future losses that they're anticipating. I mean, let's go back to California. The insurance carriers went to the state and said, we need to be able to underwrite and insure for claims that we see coming down the road. And they said, no, you can't do that. It has to be on historical data. Well, they knew fires were coming and they happened. So
Hmm.
um, I think if the insurance departments will just get out of the way of things and allow the insurance carriers to do business the way that they need to and operate the way they need to, I think that's when we're going to see changes come about, is when we see the state level uh, just stop becoming so strict on these carriers and what they can and can't do.
No, that's a great point. So, talk to us about, for a moment, to my professionals that need malpractice coverage. Maybe
Okay.
they're physician, dentist, realtor, attorney, etc. What
Okay.
advice do you have for them as far as malpractice E&O insurance is concerned?
Well, malpractice and E&O insurance is a must. I mean, those need to be reviewed on an annual basis. Um, and again, we want to look at exclusions in those policies, um, what's covered, what's not covered, what the carrier's responsibility is should you have a claim. Um, the last thing you want to do is lose a license or your livelihood because you failed to buy E&O insurance and you messed up. Um, that's the fastest way to go out of business, is not to have E&O insurance, because we all mess up at some point, right, John? Or we
Right.
miss a deadline. We do things um, that are sometimes they're completely out of our control, and that's why we buy insurance. So just the last thing we want is our families to suffer because of our neglect or errors to do something.
You know, what I was going to say is this is another example of making sure you're working with an agent that understands your industry. So
Correct.
again, full disclosure, I use Garry L. Johnson and Associates for my legal malpractice. Why? Because you guys understand the legal malpractice industry in and
Right.
out. In fact, Gary created one of the most innovative legal malpractice insurance policies out there.
Yep.
And so, again, hat tip to just making sure you're working with someone who understands your industry well.
Yep.
What parts of the country do you believe are the most stable for insurance rates for investors that are buying real estate? Where are good states to be headed to? Because I have clients in California, Florida, and other states that are fleeing those states because the insurance rates are skyrocketing. Which states are the best right now that you believe we have stable insurance rates?
That is a great question. Um, Arizona is obviously not one of those because we're taking out after California. Our rates are going through the roof here.
Hmm.
Uh, the least risk of a natural event, fire, hurricane, tornadoes. The more and more we have those, I think it's going to affect the entire country. I don't think there's a better state versus another. I mean, obviously California, Florida, even Nevada, it's getting rough to get competitive rates there. Um, your investors, I mean, that insurance should be uh, part of that investment. So, what does the cost of insurance? I mean, they need to consider that into their investment. Whether, I mean, I'm sure California pulls in a lot more visitors and than Arizona does in the summertime. So, telling them to leave California and go somewhere else, I mean, I think they're going to have the same situation no matter where they go.
Oh, that's insightful. Before I forget, can you explain to my audience what is the difference between a captive versus an independent insurance broker and which one is better?
You know, the difference between an independent agent and a captive agent is that I'm a captive agent. I work for my clients, not for the insurance company. A captive agent can only sell and work with the carrier that they're hired by. So, State Farm, Farmers, those types of agencies are what you would call a captive. They can only sell Allstate or State Farm products. Sometimes those captive agents have a better policy for certain industries that the independent agents have. But I mean, we work with just about every carrier out there that's not a captive, so we were able to provide more options and then sometimes better coverage than what a captive does.
On that note, which insurance companies do you tend to recommend due to their lack of denial of claims, customer service, etc.? Who
So
are
that on
your favorites?
on a from what standpoint, John, would you are you asking from a commercial standpoint?
Whether it's, feel free to delineate whether it's commercial or real estate or what have you, if you want to break that down. But I was just curious if you had any favorite carriers.
Well, we use the Hartford Safeco on a personal level. Um, the Hanover, CNA, Travelers, AmTrust, just about every one of those carriers has an option for real estate investors, doctors, offices, attorneys. I mean, they got a wider range of of markets that they like. And then when it comes to your personal homeowners and auto carriers, I mean, that really depends on what the insured is looking for, where their home is, what kind of features are in the home, the flooring, things like that. I mean, we want to make sure there's no restrictions on what happens in a claim situation, whether it's a flood from a broken pipe or a wildfire that burns the house down. So I mean, just about every carrier out there has a product, but what does that exclusion list look like?
Kurtis, before we let you go, any other advice that you would have just generally about insurance, the industry, how to pick a good broker for any of my clients who typically are real estate investors, business owners, high net worth individuals, professionals like doctors, dentists, lawyers, professional athletes? What any other parting advice that you'd give?
When it comes to insurance, price and premium is always great, but what are you getting for that price? Um, and if a person is shopping for price, I don't think they're one of my most favorite clients because it leaves me with a little bit of exposure there when they don't understand some of the policy languages that are in that I've gone out and got for them and how it protects them. So make sure they understand what is going to be at a exposed should they go with a cheaper policy versus the one that would actually provide an actual coverage for a claim.
So
I
let me
mean,
follow up on that.
your high net value clients,
Hmm.
their excessive exposure to lawsuits is super high. That guy's got money. I'm going after him, whether he did nothing or not.
Right.
Um, and then typically they have high value uh, assets and property and contents in their home. Make sure those are covered. I mean, you can buy just insurance for just about anything. I mean, I believe it's J-Lo that has insured her backside. So there's just about anything you need coverage for. It's out there.
So, any advice on how a client can understand value? Because I run into the same problem. Those who are shopping on price usually try to pick a cheap plan, whether that's from the internet or a non-lawyer, or even their estate planning attorney or business attorney that doesn't specialize in asset protection. And as you can imagine, Curtis, the price difference is substantial. I tell my clients that we're never going to be the cheapest solution, but the
Right.
value is in what we deliver. So,
Correct.
how do you communicate that value to your clients when they see two premium on two identical policies? How do you communicate one is actually a better value than the other?
Well, you want to pay me now or pay me later situation. Um, the pay me later may be a giant lawsuit that you have no protection for, um, versus paying the premium today and having the protection tomorrow. If what you thought was true is found out not to be, when do you want to find out? That's it. I mean, if you're a wealthy individual, you should be worried about what your coverages look like, not what it's going to cost you.
No, that's well said. I tell my clients the exact same. You can go to the cheap route and find out that it doesn't work and that you're not covered, and that when that lawsuit does come,
Yeah,
that you're exposed, or you can save money in the long run because you're not worried about the attorney's fees and losing assets by
right.
just doing it right the first time. Yeah.
Yeah. So, yeah, I mean, we all lose sleep, and losing sleep over what's insured and what's not insured should not be one of them. that's causing that. So whatever's keeping people up at night and worried about is what worries me. So making sure their worries are insured and they don't have to worry anymore. That's what's important to me. And if they don't want that, then they can probably go find this policy somewhere else.
Well, I appreciate that. And that's the real value, everyone, of working with a professional that specializes in what you do. I can't emphasize that enough is you need someone who understands your industry, who's going to take the time, not just to simply quote you a policy, but to take the time to know what your assets are, your lifestyle, etc., like you said earlier, Kurtis. How can listeners reach you?
They can go to our website at GLJ Insurance, or they can shoot me an email at curtis@gljinsurance.com, or call us at 480-892-8826.
And just to reiterate, you're able to help clients nationwide?
We are.
That's fantastic. Well, thank you for listening today. Again, I just want to emphasize that unfortunately, when I review asset protection plans, frequently insurance was never discussed with your planner. And the reason being is your planner was never incentivized to bring it up. They don't sell insurance. They don't care about that. They're trying to sell you an LLC and move on to the next client. But as my clients know, we utilize 3 layers of protection in all of our clients' asset protection plans. And the first 2 layers involve insurance. So that's why I'm grateful to have a go-to expert like Kurtis to help my clients. I'll also remind you that, did you catch Kurtis said you need to have your insurance reviewed annually? That is just critical, everyone, to make sure that your coverage continues to meet your assets and your goals. And we feel the same way, is that you should have your asset protection plan reviewed at least annually. Kurtis, thank you so much for being with us today.
You bet. Thanks for having me.
Take care.
You too.
You've been listening to the Asset Protection Show, expert strategies by attorney John Skabelund. For more information, go to assetprotectionshow.com.
This content is legal information only and not legal advice. Viewing this content does not create an attorney-client relationship. Mr. Skabelund is admitted to practice law in Arizona, and he may be reached at ultimateassetprotection.com.